Good morning. Good morning. Good morning. Good morning, guys and gals. Happy Monday, February 23rd. I believe today. Oh, today is my sister's birthday. I just realized that. Guess what I get to do after the stream? I better give my sister, reach out to my sister and wish her a happy birthday. Yeah, so I can remain on the good brother side, right? All right, let me get my chart shared and we'll see what we got going on. What's going on, Algo? Algo Prime Plus, how you doing this morning? How was your weekend? What did you do? Let me get this shared. Entire screen. There we go. All right. All right. So, man, it was good. Just did a lot of relaxing over the weekend. I need the relaxation over the weekend. I am on my charts from literally sun up to sundown throughout the week. So on the weekends, especially Saturday, it's just nice to completely unplug, sit back in my chair, turn on YouTube, and just watch stuff. That's kind of my way of vegging out on a Saturday. I try as much as I can to stay away from trading because too much of a good thing can, burn a person out. I don't get burnt out on charts and things, but I like to force myself to at least take one day over the weekend to stay away from it. And the same thing on Sunday. It kind of rolls into the same thing. I'll just sit back, relax, watch a bunch of YouTube programs, um, maybe some trading follies. I'm sure you guys have seen them on here on YouTube where people bit of misery, but it's just a good reminder to, what not to do, meaning leveraging up on high impact news releases and such. So yeah, it's kind of funny, but it is kind of sad at the same time. So those are the people that we got to find eventually to correct and, help them to understand how to trade without over leveraging and, things like that. Too many people are risking way too much per trade out there. It's crazy. I mean, it's evidence. So yeah, it's anyway, it's just good to relax, get away from everything. No matter what you do in life, it's good to get away and take a break. I love being in front of the charts all day long. You're my spirit animal, Algo. Yeah. Yeah, I mean, I'm at the point where I don't really have to do it anymore because I've probably put in 20,000 hours if I had to count everything up at this point. I know I counted everything up about 4 or 5 years ago, and at that point I was at about 12,000 hours. And so I know I'm over 20,000. Like, it's good in the beginning so that you can understand patterns and everything. But there comes a point in time where you figure out the basics, you figure out your strategy, and now all that you got to really do is just set alerts. And then when those alerts go off, you take a few seconds to decide if you're going to buy or sell, right? But so yeah, early on, I understand it. It's good to get the chart time. I always say get your 10,000 hours out of the way as soon as possible, right? But yeah, after a point in time, you kind of earn your right not to have to stare at a chart all day. You just set your alerts and step away. And I'll even do that throughout the week, like throughout the day. I'll set alerts and I'll kind of sit back and try to find little periods of relaxation here and there. Pop on a YouTube video or two, maybe watch a trading, some of my trading mentors, gurus I've had throughout the years, just kind of see what they're doing. And sorry, guys, I did not make my bed. I just realized that. I did my laundry yesterday and just threw it up there on the other side. You ever sleep with your laundry, guys? Or am I the only weirdo that does that? I'll throw the laundry on there sometimes and late at night or whatever, be too tired to fold it. So then I'll sleep with it. All the time. Okay. Yes, I'm not the only one, Algo. All right. Good deal. Such is the life of a trader. Getting lazy. Yeah. That's it. Well, the computer sucks you in sometime, and it's like, man, you forget to do the basic things, like put your clothes away. Oh, what do we got this week? Last week, just as a recap, man, I had a very busy Monday and Tuesday, and I talked about this in my video that I released Saturday evening. So that is one thing I did on Saturday. I went ahead and recorded a weekend video. I normally do it to release on Sundays, but I got to thinking, if I'm recording these videos on Saturdays, just as a recap of the week and then kind of a preview of the upcoming week, well, I want to make sure that the other side of the world has a chance to see it Sunday mornings, because here I am releasing them 6 a.m. on a Sunday. Well, by then, Japan and Asia, New Zealand, Australia, they're already, getting ready for bed, if not asleep already, to get ready for Monday. So I ended up releasing it Saturday around noon, I think, noon or something. It was about 2 o'clock, I think it was. That way, people in the Asian time zones, in the Australian time zones, have a chance to see it for their Sunday mornings, right? So anyway, I did that before I relaxed for the rest of the rest of the weekend. What's going on, Zambezi? What's going on? But anyway, yeah, busy Monday, Tuesday, and then Wednesday, Thursday, Friday. None of my alerts just excited me. Like I had a bunch go off. I had at least 2 that went off that would have been a pretty good profit, but there was one little thing I didn't like. And I'll show you a good example on the one on Friday. Let me see. That was trying to remember. I think it was pound Aussie. I think that's what it was. Let's see. Let's go to, come on. See, and my mouse, it just continues to be silly. Seems like it's slow about stuff. No, it wasn't pound Aussie. Or was it? Was it Euro Aussie? Well, hold on a second. Euro Aussie, pound Aussie. No, it's pound Aussie. It was pound Aussie because I had a picture of Cartman on here. That's right. There's Cartman. Damn it. See that? All right. So price on pound Aussie on Friday. Let's see. Where was this? Let me turn on my sessions tab so I can see what I'm doing. Yeah, it was right here. So I was looking, forget this last supply zone. I was looking at this supply zone here, and I was doing it on a smaller time frame. Yeah. Oh, that's right. It was 10 minutes. Okay. So I was looking at this supply zone right here, that little 10-minute candle, and I was waiting for a retracement there. That was the one that I liked. And then when price returned, I should have got in it and sold, right? Because that would have been a profit. I would have just simply taken it to the next swing low. But if we zoom in right here, look at that. You see that tiny little gap? It missed it by point. I measured it out, guys. 0.0 from the top of there here to the candle there. 0.00002 pip. So 0.2 of a pip, it missed it. And because it didn't touch my supply zone, guys, I didn't get into the trade because I look for unfilled orders, right? That's what a supply and demand zone's for. Unfilled orders. Now, yeah, I probably, and this is where I kind of get my own self in trouble, just full transparency. Because sometimes I overanalyze stuff. Well, obviously, I want to wait for the unfilled orders, but I also have to recognize that sometimes 10 minutes is too damn small. Too small of a time frame. Because if I go to a 15-minute, well, it's just the wick of a candle. So it's not really a body. And the body is actually deeper and would have gotten touched. But I just didn't like the picture. That's the whole point I'm saying. 15-minute, 30-minute, hour. I just didn't like the picture of what the zone was showing me. So this is, I don't think, it's not a bad thing. I'm still, making sure everything is completely pitch perfect whenever I get into a trade. But sometimes I'll miss a trade like this just because I'm a little too picky. Have to go big. Oh, you have to go. Okay. Right on. I'll go have a good one, man. So anyway, I missed the trade. And then it obviously just sunk pretty quick down to my would-be take profit, which would have been down here. Okay, I was looking at this demand zone right here as a spot to buy to cover just ahead of. So that didn't take long at all, about an hour, 15 minutes, something like that. So I was annoyed about that. But hey, I didn't break my rules, right? I didn't break my rules, so I didn't lose any money, but I didn't make any money either. So I just thought that was kind of funny. But now we've since created some more supply zones up in this area. And these hit yesterday evening. And I don't normally like placing trades on Sundays. Because the market here opens here in the U.S. opens for me around. It opens at like 4 p.m. Central Standard Time. But there's always thin liquidity during those times, so I try to avoid, getting into trades during that time unless something just looks absolutely perfect. Now, this looked kind of pretty nice, except for the fact that if you see this demand zone we got down here, I got to go all the way out to a weekly time frame, but you'll see that we had a weekly demand zone that we bounced into. So, I was just a little bit skeptical that anything in this area is going to be stronger than the higher time frame zone, right? Remember, the higher the time frame, the better. Or the higher the time frame, the stronger. So for that reason alone, I stayed out of it. Now, I had a few other alerts hit, and it's kind of funny, guys, because every one of these alerts hit. And again, it was Sunday evening for me, so I avoided the trades. And every single one of them looked like they want to work out. So here's Aussie Swiss. I was looking at this one on a 2 hour demand. Okay, and look at that. Bounced in, and we bounced up to the would-be profit. Okay, buy into demand, sell at the overhead supply or overhead swing high, whichever is closest. So as far as looking at supply up here, yeah, I mean, you look at this candle right here, and as you can see, it's already touched it, wicked in. So there's another one that was a pretty darn good looking one, right? So we got pound Aussie, Aussie Swiss. Now, if we go to Euro Aussie, this one hit as well. And there you go. On this one, I think it was a 2 hour supply. So we bounced into 2 hour supply. All this happened yesterday evening. Why couldn't this have happened Monday morning, right? I feel more comfortable about these trades on a Monday morning versus a Sunday evening when there's thin liquidity. It's just Asia liquidity, right? But anyway, such is life. That one would have been nice. Here's an underneath demand zone. Would have been a nice take profit. I didn't really, honestly, on this specific one here, I didn't really like the profit target or the reward risk ratio. Okay. I wasn't really excited about that. I feel like this demand was a little too close to this supply. So that probably would have gotten about a 1-to-1, right? That's not enough for me, but despite it, it still worked out. What about this other one? Euro dollar. And all these, by the way, are on the edge finder as, bearish and bullish scores, depending on which one it is. So here's a fourth one, guys. These all hit. I wish these would have hit this morning. These would have hit this morning, I'd have been in some of these trades. But here you go, euro dollar, bearish signal on edge finder. Look at that supply right there. Okay. So you got a higher time frame supply, which is the 4 hour, 4 hour red candle. Now, it wasn't the best looking. Wait, hold on a second. Yeah, it wasn't the greatest gap. So maybe not excited about it on a 4 hour, but going to the 1 hour, I mean, there's no denying that because I got a gap here. So that presented a good signal. 50 EMA is below the 200 EMA. Price was down here at one point. Now, I did bounce off of this demand zone. So this is another reason I avoided this trade was because we hit this 4 hour demand over here, which is inside. Most of it's inside of this daily demand down here. So when that hit down there, that made me think, it might not be a great idea to be selling in this area because when you have a confluence like that, oftentimes it can send it to the next highest supply zone, which I was kind of looking at as this one way up here rather than this. And this is a little too cluster effy, if you know what I mean, right? So I avoided that, but despite that, look at that. It bounced into the 1 hour, and what did it do? Bottom's trying to fall out of it. Right. So all four of these alerts that hit yesterday, if I'd have got in it, would have been great. But if ifs and buts were candy and nuts, we'd all have a Merry Christmas, right? What's going on, L House? How you doing? Let me do it. All right. So but it's Monday now, and the liquidity is going to start piling in, especially when New York wakes up here in a couple hours. Okay. Well, a little less than that, hour and a half. So now it's just time to regroup and reevaluate. So let's take a look at the alert at the Edge Finder. Yeah, Aussie yen, that's still at the very top of the list. And it makes perfect sense because if I look at the surprise index, the currency surprise index, the Aussie dollar is still at the very top as far as strength. So it's exceeded expectations on 2/3 of its high impact events. Okay. 66%. And the yen, in contrast, it's at the very bottom of the list. It's only at 20%. It's only exceeded expectations on 20%. So let's take a quick look at that. Quick look at the heat map. Okay, here's your Aussie dollar here that I just mentioned. The last 7 calendar days, the only thing we had was unemployment rate come out. That was a pretty nice score for them. Okay, they did drop their unemployment rate by a 0.1%. So they have exceeded on, again, 2/3, 66%. But then if we look at the yen, it's got a lot more red on there and a few more neutral readings. So it's only been 20%. So 1 bullish reading, 4 bearish readings. Okay. And then again, as always, when you see a neutral rating like this, where the economists actually got it correct, you just kind of skip it because it was expected. It was priced in, right? This is why we only care about the surprises, right? Only the surprises, the ones that beat and the ones that missed. So the yen currently is the worst. And here is your currency index, surprise index, showing that. So Aussie #1, strongest currency. Dollar's right behind it. The dollar's actually gained some strength lately with some pretty decent readings. And then the euro is tied with a couple currencies I don't even trade. Okay? Turkish lira, South African rand. I don't trade them because I don't have a broker with any of those on there. Besides, the liquidity is not the greatest. I just stick with the 8 major currencies. I don't know about you guys out there, but just give me the $4 we have, the US dollar, Canada, Australia, New Zealand. That's the $4, right? And then the pound and the euro, the Swiss and the yen. That's all I personally care about. I lived in Mexico for a while, so you'd think I'd be interested in trading the dollar Mexican peso pair, but no interest in it. It's just way too extreme in some aspects, and yeah, liquidity sucks. So I'll just stick with the 8 majors, right? So yeah, as far as this week goes, unless some of this starts changing, nothing's changed. I mean, the same thing I wanted from last week. I want to buy the Aussie dollar as much as possible, but now I'd like to be buying some dollar, the US dollar. What's going on, 79 Jeremy? Oh man, I'm doing well. Doing well. I got up a little later today than I wanted to. I normally get up at 5 into 5:30, but today I just was like, oh, I was so comfortable. I think it was 6:10 when I got up. Needless to say, I'm still pounding my caffeine so I can get up. Oh, by the way, guys, so something cool did happen as I was waking up this morning. I noticed because I actually sent off an application a week ago for a position to be a financial analyst and a video content creator. And they sent me a reply back saying, hey, we want you to make this video. And then we got these 4 questions for you if you can send this to us. So I did all that on Thursday, I think, and I sent it back. And then just today, I got an email reply saying, hey, thanks for your application. After reviewing your CV and your home assignment, I'd be happy to schedule a brief Google Meet call. So that's a good sign, right? That's a good sign. Hopefully I get me another freelance project along with Trader Nick's. That's my goal so that I can focus on my trading side of life without having to worry about my bills. So we'll see what that, I don't want to put the cart before the horse, but they've went through some effort to talk with me. So I'm pretty excited about that, guys. If I get to that point where I don't have to worry about the bill side of my life, the trading side is going to be even better and even better content to come. Okay. So that's the whole point. I've been unemployed since January 8th. Okay. thank God I put a pretty big stash away. So bills are covered. Well, about 4 months worth. I'll just put it that way. Okay. Put that aside so that I can, my I'm back. All right. Sorry, guys. It's my once a day. It's my once a day screen freeze. Let's get my screen shared again. Gosh dang it. And every time I do that, I lose everybody. Give me a second. I'll give you guys a second to come back on. Make sure that was looking okay. All right. So we're back, guys. Sorry about that. But yeah, just to finish about the index. Yeah, you take the total that had a bullish, had an exceed expectations or a missed expectations, total it up. That's 5 reports. And then we got 1 report that beat expectations. So that's 1 divided by 5. And that comes out to 20%. So hopefully that makes sense. What I was saying, though, is if it's under 40%, if this number right here is under 40%, then I start looking to have a lot more interest in selling that asset. Whereas if I look at Aussie dollar as an example, it's over 60. So anything under 40, I sell. Anything over 60, I buy. So the goal is always to try to match, when I go back to the index or the surprise index itself, the goal is to always match a strong currency with a weak currency. So in this case, I'd be wanting to match Aussie dollar, US dollar, euro with the yen or the pound in this case. So that really kind of narrows down my interest. So in other words, I'm not interested in the other currencies as much, the Canada dollar, the New Zealand dollar, the Swiss franc, okay, because they're a little more neutral. It's just not giving me a good enough reason to sell or buy that currency, if that makes sense. So, and it's no surprise that most of the time, the currencies at the top of the, the top setups or the bottom of the list, always it's not the end all be all, but it is the biggest. To me, it's the biggest portion. To me, it's the biggest reason to buy or sell something. Because when we go to the top setups, as always, the fundamental analysis is the biggest portion of this list. It's 14 individual boxes of data. Okay, your jobs numbers, your inflation numbers, your economic and growth numbers. But we also have to keep in mind there's a important part in the sentiment analysis. Okay, the relationship with the smart money, the COT report, and the dumb money, the crowd sentiment. So retail sentiment, AAII investor survey, put to call ratios. Okay, that's all part of crowd sentiment. And then when you get over the technical side and you got seasonality. So the average of the last 10 years, has it been something that's been a bullish asset or a bearish asset? So that's seasonality. Right? A lot of people trade just based off seasonality. Right? I don't like to do that. I used to do that with retail sentiment. I used to look at the retail sentiment within the crowd sentiment box. I used to look at that like the end all be all. A lot of times it would work just fine. Okay. Contrarian signals. If the average trader is net long on, or net short, as an example, on Aussie yen, that's what this box is telling me. This is telling me the average trader is net short on an asset that's getting all these bullish readings. And oh, by the way, the trend is up. Okay. So the trend, that's saying that, yes, it is in fact bullish. But the crowd sentiment is saying that they're net short. Well, why is that? What's the psychological reason behind that? Well, because when you have an asset going up, uptrend, most retail traders, what are they trying to do? They're trying to stop a rocket ship. Or if we flip that around for the Euro Aussie as an example, all the way down here at the bottom, if you look at this is a downtrending asset because it tells us right here, -2. So downtrending asset. However, if you look at the crowd sentiment, this is saying that the average trader is net long. So they're trying to catch a falling knife. That's what the average trader is doing. This is their real-time positions. Why is that? Because most traders are trying to do the opposite of what they should be doing. So contrarian signals are a huge part. Even though it's just one box, it's a huge part of this list. But Do I want to be selling an asset if I've got a whole bunch of blue boxes over here, meaning it's exceeding expectations for that base currency? No. But when I get all this stuff to line up, whether it's bearish or bullish, whew, that makes for some way better trades, ladies and gents. And then you just simply use the chart to go time it. Chart is the least important part of trading. It really is. I can't stress that enough, guys. When I finally figured that out, that's when my challenge accounts turned around. I was in the hole on one of them, pretty deep, $9,000 in the hole. Okay. Then when I started putting two and two together, and following Trader Nick over at A1 Trading, and started getting my hands on this edge finder, that's when I started to realize that you got to look at everything as a whole, as a whole, as an aggregate. Okay. Looking at all that as an aggregate. So anyway, I'm sorry I got off track. You wanted to see CAD yen. So CAD yen is not on the list. I'll tell you real quick, and then I'll show you the chart. CAD yen is right here. So it's a neutral score. It's saying it's a -2. So technically, it's in a bit of a downtrend. Sentiment, so the relationship between smart money and dumb money, is given a slight bearish nod, but there's zero. It's straight up zero on the eco score, meaning there's, as an aggregate, it's neither bullish nor bearish. So it's just neutral. Remember, when I get into a trade, I like this box to be one or the other. Either give me a decent sized negative score if I'm trying to short, or a decent sized positive score like you see there for Kiwi yen, right? To buy it. So anyway, let's go look at it though, because I still look at charts. I still look at the technicals, even if they've given me a zero score, a neutral score, with the anticipation that it could turn. Just takes a few, it's a very dynamic list. When we pay attention to our Forex factory or whatever economic calendar you're looking at, I mean, these things change scores. It's a very dynamic list is what I'm trying to say. So anyway, CAD yen, if we go find that over here. And guys, sorry if I don't get straight to the point, but it's important. It is important to understand the why behind it first. You guys, does that make sense, guys? We have to understand the scoring before we get into something. We have to. Because otherwise, we're just coming over here and blindly placing, hitting the buy or sell button. But from a technical aspect, I love on CAD yen the fact that we do have this daily demand zone down here with a 4-hour demand zone inside of it. This is my favorite confluence right here. And I actually drew this up pretty cool the other day, because look at that. You see those red boxes right there? Think about this. These buyers that had the strength to push price back to the top of this curve, they've got their stop losses down here, and their stop losses are sell orders. Same thing here, guys. Price is kind of bounced off the swing low. It's kind of turned into a double bottom, and price is on its way back up. Well, there's buyers that had the strength to push price up, and same thing. They've got their stop losses down here. So if I'm a big bank, and if I have all the fundamentals in my favor when the time comes, I really would like the fact. I would really like price to drop, because what's going to happen is when price gets down to this level, it's going to start taking away those liquidity pockets, these sell orders. What do big banks and institutions need to fill a buy order? They need sell orders. They have to have these sell orders right here. And those sell orders are, at the top of and even in the bottom of this demand zone, this unfilled orders from this demand zone. And I've got two sets of eyes, guys. I've got two high time frame sets of eyes watching this zone right here. Obviously the daily, because you see it's a daily candle followed by a gap, big, strong runaway gap. Okay, that broke structure. But then also, if I go to a 4-hour time frame, we go to that same spot. Okay, everything magnifies in. Now I see that I've got a 4-hour candle here with a gap. Remember, the gap is the important part to this on the time frames. The gap the gap right there, that tells me that I also have 4-hour time frame trader eyeballs on it, right? Does that make sense? So daily set of eyes. I've got the 4-hour trader eyes. Broke structure. Okay. I really like that. What else do I like about this? Well, it's mainly that, because I can't really utilize my backbone strategy to filter anything, meaning the average, the moving averages. Because see, I like, when I get into these trades, I really like to have the 8 exponential moving average. I like to have that above the 21 EMA, exponential moving average. It looks like, yeah, I guess we do technically have it above it in this example here. So the light red is the 8. The light red is the 8. And then I'm sorry, I lied to you. The dark red is the 8. I had everything flipped around on me. So I'm not getting the exponential moving average help. So, this is mainly when it comes to these daily 4-hour confluences, it's really based mainly off of the zone itself. So I'm not really getting the help from that. I'm not getting the help either from my RSI. So, this is really just a big liquidity trade is basically how I'm looking at this. Because daily 4-hour, me personally, I've had my most success from these zones right here. Assuming everything's in the trend and all that. It's in no man's land, and it's no surprise this is in no man's land because I'm getting a neutral reading. Right? I hope you read it. What do you mean by that, Sun FX? Hope you read it. So anyway, just to finish that up, this is just kind of a no man's land for CAD yen. If you have a reason though to trade it, trade it. My reasons just tell me not to trade it. So let's look at the strength of those currencies though. Let's go over here. CAD yen. Now remember, yen is the weakest currency. So for that reason alone, that's a pretty good reason to buy CAD yen, right? And Canada dollar, it's at 57. So that's within that 40 to 60% range. I told you that I don't really like trading as much because it is neutral, but it is close. One more good reading for Canada might be onto something there. And if that happens, if you get a good reading or two, it'll pop off the list into the bullish list. But right now it's just -2, so I'm staying away from it. Get my regular setups back up. So guys, we have oil, we have gold, we got some of these risk-off assets on here. Okay. Obviously the military, the U.S. military is over in Iran camping out, right? In the water, doing their thing. So President Trump on, what was it, Thursday, I think it was, did say that they've got 10 to 15 days to accept the nuclear deal. Okay. Or else. So, because of that, you've had oil spiking pretty good. You've had gold and silver get some bullish readings. And, how do we trade those? Well, it's not a surprise that those assets are going up. Let's look at the COT report. Okay. The COT report, as always, is released on Fridays, usually around, I don't know. I think it's around 4:00 my time, Central Standard Time, or it might be 3:00. I'm not sure exactly, but let's take a look. What did the big banks and institutions do? What did they buy? Is it no surprise? It's no surprise to me that I look on here and I see oil at a pretty decent clip. Anytime I see the net change percentages, if it's 2% or higher, then that tells me that there's some pretty good interest. Okay. Now, I'm not saying I won't buy US dollar because it's under 2%. It is still a 1.6% increase. But me personally, the way I kind of read the COT report, if you start getting 2% or higher, then that's a pretty strong signal, okay, to follow the banks. Follow the banks. They're the ones making all the money, right? I say it all the time. What I like to do is I like to read what banks do and trade like a bank. Okay. Ride their coattails, ride their coattails, ride their coattails. Now, this is only one piece of the sentiment. Okay. It's the COT is one box. So obviously we got to look at everything as an aggregate, right? But the COT report is big because the banks are the ones that have the power to move money around. And they make a lot of money, right? So this is why I say I like to look at the relationship between the smart money and the dumb money. Because if the smart money is buying something and the average retail trader at home is selling that same asset, then that's a good signal. Because we follow the bank because they're buying, and we look at the fact that the retail traders are selling as a contrarian signal and do the opposite, right? Which is a buy. So there you go. That's what I like to see on sentiment analysis, which nobody talks about outside of Trader Nick and company, guys. Okay. I haven't seen a single other person on YouTube in all my time talking about sentiment analysis. You hear technical analysis all the time. You hear fundamental analysis once in a while, and a lot of people group in COT report with fundamental analysis, but I think it should be its own standalone analysis, and surely that's what it is. So anyway, so yeah, just looking at oil, we had a big gain there. Silver was 1.5%. Okay, and gold was actually a little bit on the sell side. So we're kind of getting mixed signals from the banks and institutions. Now, I will say this report is accurate as of Tuesday. So when did President Trump make his comment about Iran has 10 to 15 days? He did that on Thursday, right? So these numbers do not take into account what President Trump said on Thursday. Okay. So I would suspect that this week we're probably going to get even more buying of U.S. oil, of gold, of silver. That's just my thinking. That's not financial advice, but that's my thinking, because now we've got a legit threat by President Trump after these numbers came out. Does that make sense? So if come into Friday, when we get our updated numbers, those will be updated as of tomorrow, Tuesday. Okay, because the report is accurate from Tuesday to Tuesday, and then we get it 3 days later. So it won't be a shock at all for me to see oil, gold, silver up here in the net change to the long percentage even more. So we'll see. That's just my speculation. Again, not financial advice, but that's just my own bet to myself, right? But anyway, how can we take advantage of that? Well, we can take a look. Let's look at some gold and oil and silver. Okay. Oil's giving us a +7, gold's a +6. Now, silver's not on the list. Silver is close. It's a +3. Okay, it's in the neutral camp. But right now, it's all about oil and gold. So let's go look at those charts. All right, so here's oil. Now, what I like about oil is the fact that we did close above this daily supply zone last week on Thursday. Thursday and Wednesday had some really strong pushes. Now, we had this like 2-week consolidation period for a while. If I turn all my drawings off, turn on my master pattern indicator, see how what this indicator does, guys and gals. This kind of looks at some of the main consolidation points that you see on any time frame. And the whole idea is if you're on a daily chart and you're inside of that orange box, well, you're just in a big consolidation zone, so a big chop zone, right? So the idea is you want to wait till price leaves that area. Oh gosh, I'm sorry, guys. Get my chart shared again. Technology's a pain in the ass sometimes. All right, sorry about that. So anyway, yeah, I was just talking about oil being in a consolidation box here. It's going to be my master pattern indicator. Okay, I'm turning on and off over here. But when you're inside of that box, it's just a good idea to wait till price leaves that box. So that's exactly what we got on Thursday with oil. We had on Wednesday that really strong candle up, and then the strong candle out of the box with a close. So this is really some of your highest probability trade setups. When you have price on a daily chart leaving the box and closing, whether it's above or below the box, right? In this case, above, it makes perfect sense. So I really, really like oil, even though I don't really personally trade it a whole lot. We call it the problem child at my last employer when we did live streams for Forex and everything. We called oil the problem child. But I think this looks like a pretty good one, guys. I mean, think about it. You add the consolidation. This is what people refer to as the breakout trade. Now, just because it broke out and closed doesn't mean I want to buy it up here. Still got to wait for a retracement. Still got to wait for a discount, right? So let's go look at a smaller time frame. Let's turn that. Let's go to a 4-hour. Let's turn off my master pattern indicator. Turn on my drawings. So there's a conservative place to buy and there's an aggressive place to buy. Okay, down here would be the conservative place to buy because it's also a former resistance point, that blue dash line from this point going right through this demand zone. So this to me is a very high probability place to buy. That's if it even gets down that far, guys. It might be too strong to even get down to this far. So that's why I drew this box up a little higher up, this demand zone, and look what happened. Price has already bounced into that 4-hour zone I drew up on Friday and taken off. So can't use that. But that was a good point in time to be buying. Okay, that's a very nice 4-hour indecision candle, followed by a gap, right? Got our acceleration gap right here. So there's our gap out, showing that was a place where demand heavily exceeded supply and had the strength to push through the rest of the overhead supply zone. Well, it had already touched back here, but get the close this time. Okay, remember this had the power to finally close above the box. We didn't get the close back here, but over here is the first time we closed above the daily supply. So I think we got a pretty good runway, at least till this overhead supply up here. That yellow box, like all this area in here is fair game. There's not really anything holding it back. No supply zones. Okay. Not till we get up to this area. So 68.5. Okay. We got a runway to 68.5 if we can find a discount here to get into this trade. Now, like I said, this might have been the best one. I didn't get into it because, again, this was Sunday. This was yesterday, guys, for me here in the States. So price was up here, and what did it do? It gapped in before I had a chance to see this. It wasn't really on my radar. I had an alert set, but I was watching a movie, so I missed this. But either way, I don't know. I don't know about you guys. I'm not really a big fan of trades on Sundays. Right? Especially with the geopolitical tensions that we got going on right now in Iran and all that. But hey, just goes to show you the power of supply and demand, because it dropped in beautifully. But see how quickly it dropped in to that demand? It was just really quick, and then it closed. So you had to be real fast to even get into that. I'm going to go to a 1-minute chart just to see what happened. Let's see how strong this demand zone was. Yeah, there you go. Price gap down and just slammed into the demand and got slammed back up. I say it every time, guys, but even if you don't trade supply and demand zones, it's a good idea to at least still understand how to find them. Okay. That way you know that this right here can happen. Because that's high on the curve, is it not? Where's my curve analysis? Well, it's going to be swing low to swing high. Swing low to swing high. So that's basically where the top third and the middle third intersect, right? So that's an expensive price, if you ask me. But it's a set of unfilled orders. Okay? There's unfilled orders. We know that because of the gap. And we also know that because it had the strength to close above that daily supply zone. My favorite place to buy is down here in the bottom third in the discount. But these happen. These happen. These are good zones too. I mean, that's basically your what 38.2 level. I'm gonna guess if we put on the regular fib, pretty close. So just ahead of it. Okay. Just ahead of it. That's the other thing. I don't like buying demand zones that high up. I just don't. But hey, it worked. Just goes to show you the power of supply and demand. So again, it's just a good idea to know where they're at in your own trading. Okay. So yeah, that one's over with. So let's go to a smaller time frame. So on the 1 hour time frame, which is the one I like to look and verify my backbone strategy. Okay, I've got my 50 EMA, that light blue line, that's above the blue, which is the 200. So 50 over the 200. That's a good sign. That's a good sign that the trend is trending in the right direction on this time frame. For a pullback, though, I have to look at this as far as a pullback. So in other words, you know, the way the trading strategy is designed is you wait for a pullback to the moving averages, but specifically the 200. So that's still quite a ways away. And I don't know if I like any of this here. Let's think about this for a second. Perhaps we could get a bounce off these little demand zones hiding in here. Let's do this. You know, something like that. I mean, that's obviously a demand zone. Now, the quality of it, that remains to be seen. But you had a consolidation with a gap. Okay. This right here is close, but it looks to me like the one I drew up already touched it. Yeah, so it's already been touched. So I can't utilize that candle. This one, though, still has a gap. Okay. It's not the biggest gap, but it is a gap nevertheless. Talking about that little white box. Now, what I like, though, is the fact that the 200 is right at or just above the zone. So if we get price to come back, wick through the 200 EMA, and just go a little farther to collect those unfilled orders, and we might have another opportunity on our hands. Right? That's oil for you. It's about your... Yeah. So that might be another opportunity. It's aggressive because it's not in the bottom third, but again, we're getting a pretty good score and a geopolitical score too, as far as I'm concerned. Because of the, because of the Trump threats. So that's your oil. What about gold and silver? Gold specifically, since we have a bullish signal. Now we did finally close above a kind of a similar zone. Okay, so I drew up a couple things the other day. Let's go to a 4 hour. So on a 4 hour, we had a kind of a similar story to what I was looking at earlier. So we had a double top down out back here, a little bit of a double bottom down here with some liquidity points, guys. So I made the drawings the other day saying, hey, if we get price action like this, where we come up and take in, jump into these liquidity pockets, and if we start getting price to roll back over, then my goal would be to buy down here in this demand zone. This is a 4 hour demand zone. But if we get price come out and go higher up like this before coming back, then I'd be interested in buying a demand zone here, right around this double top. So former resistance becoming support. But it really just depends on if we get a demand zone in this area. So, for a trade like this, that's basically the two scenarios I'm looking at. It just depends on how high price comes out. Is it going to stop where it's at now and start to roll over? Okay, great. If so, come back down to the demand zone. But if it comes out higher, which remains to be seen because we still need more candles to print, then at that point, I'd be interested in buying the former resistance. But again, it has to print me a demand zone. So it's not too early to see. We could go look and see, did it give us a decent looking demand zone down here? Let's go look. And we already know that that supply zone's out, so I might as well just delete that. Okay. So do I have a demand zone? Well, we had a push up. We had a bunch of sideways consolidation nonsense. And then it started picking up steam going to the upside. So do I have any demand in these areas? Well, let's look at our relatives, our VSA, guys. Sorry, had brain fog this morning. Volume spread analysis candles. There's a lot of trading activity that happened on this red candle with a big wick. So does it present me on a smaller time frame with a demand zone? I don't know. Let's go look. Because I'm not really liking it on a 1 hour. It's an efficient market. All these candles and all these wicks are touching each other. They're overlapping each other. So it's not leaving me with a gap. It's not leaving me with any inefficiencies. But what about this candle on a smaller time frame? 30-minute, nothing. 15-minute, not really anything over here either. All these wicks and candles are overlapping, so that's efficient price structure. I probably don't want to go down a lower time frame, but just for kicks, we'll take a look. Okay, there's 10 minutes, same thing. Wick right there is overlapping. What about the 5-minute? That'll be the final one. Okay, 5 minutes. Is it giving me anything? No, not even on the 5-minute. See that wick? Touching this wick? Okay, we have to look at this on a horizontal plane. That's an efficient price structure. So, and this one here overlaps this wick. So there's basically an efficient price structure throughout this, even on the smaller time frames. So I cannot utilize that in good faith as a demand zone. None of this. So maybe an aggressive approach would be to say, if we get price come up, if we do get price to come up ahead of these liquidity zones, well, maybe you just take, I can tell you that some people will be taking this form of resistance and just buying off the retracement. I don't like to do that because I like to look for unfilled orders. I hope price now just reverts all the way down to here, but probably won't because of the geopolitical tensions. So, yeah, I wished it would have presented me with a demand zone, but it just didn't. So I don't think I'm too interested in it. On a daily time frame, yeah. I mean, if nothing else, maybe you just place a buy order off a bounce of the former double top. But I wouldn't want to do it unless it comes a little bit higher first. So if price can come up to closer to 5,300 and then reverse, maybe even 5,200. Yeah, if we can get price to come up to like 5,200 for gold, 5,200, 5,250, and then retrace, okay, then maybe your double top might turn into a support, right? I'm just a little bummed about it because it's not really a pretty picture of a zone. So that's that. And then silver, we already know is neutral, but silver is really the opposite of gold. See, gold is still giving us more of an uptrend because we have our 8 above our 21 EMA. But for silver, it's the opposite. On silver, that red line is going to be underneath. Okay? Red line underneath the light red, I should say, dark red. Now, we've bounced into a supply zone on silver. Talking about this one here. So that's where we're at currently. So I'm going to go ahead and delete this zone since it didn't have any real weight. Yeah, I just don't like it. I don't like silver at all. It's too sideways. And it's just now peeking its head out of the master pattern consolidation zone. It's wicking, but it hasn't closed. So if I were to want to attempt to buy this, then it would not be today at all. I'd need to see a strong candle come out of that spot and close. Most importantly, close, not just wick and come back into the zone. So, yeah, nothing for me on silver. I'd buy gold before I'd buy silver because at least gold has given me more of the uptrend look to it. It's clearer of a trend, right? And then we already went through oil. So that's the more risk off type looks. I got about a half an hour, guys. If you have anything specifically you'd like me to look at, any charts, anything, let me know. It could be anything. Okay. I focus on currencies, U.S. indices, Bitcoin, silver, gold, and some stocks too. Okay. Some stocks. So if you guys need a stock looked at, you can look at that, because supply and demand works the same on any asset as long as it has liquidity. Okay, it's probably not going to be the best for penny stocks, stuff with almost no liquidity, right? But when it's anything worth that the interbank system looks at, it's good. It works well. I want to take a look at these ones again real quick, just to see if these were the alerts I had hit yesterday. Yeah, we're still quite a ways. I'm going to turn that off. Man. 1 hour. Oh, turn my drawings back on. Aussie Swiss, Euro Aussie, Euro dollar. Yep. All right. So let's just go look through some of these alerts. So Aussie yen number one. Aussie yen, remember, is the strongest currency in the Aussie and the weakest currency in the yen. So daily chart, I've got my 8 above, my 21 EMA, which I also have higher highs and higher lows. 4 hour, I've got a 4 hour demand zone down here. This is the swing low compared to the current swing high. So this is the bottom of the curve. But I'm also keeping an eye on a spot closer because I'm looking down on a 1 hour. And on a 1 hour chart, I have a demand zone hiding here, which the main reason I like is because of my moving averages. They are above that zone. So on the smaller time frame, my 50 EMA, which is the light blue, is ahead of the 200 EMA, which is the dark blue. Again, the 200 EMA is the place to buy, but I like price to pierce the 200 and hit the demand or supply zone on the other side of it. So in this case, I've got my alert set right here, ahead of this 1 hour demand zone right here. This 1 hour demand zone that left me with a gap. Now, it's not the strongest looking demand zone, if you ask me, because it didn't really break a structure, which is this point back here, until it kind of got lazy and reversed for a little while and then continued. But it's ahead of the 200. So if price comes down, I'm going to be extra picky on it because it is kind of in the middle of the curve. So my RSI has got to drop down to 20. It's got to get overbought to 20 if price comes down here for me to be interested at all in buying. But the highest probability is going to be the return to this 4 hour demand because it's closer to obviously the swing low, right? If we're looking at this as a new impulse leg, swing low, swing high, curve analysis says buy in the bottom of the third quadrant, or in the bottom third, okay, the discount zone. Because technically we're in the chop zone right now. If we're going after this demand zone, okay, don't diddle in the middle, right? Yeah, and that's probably going to keep me out of it, even though that's where my 200's at. Okay, so on a 400 though, it all works, or on a 4 hour, it all works the same. Okay, 4 hour time frame. Again, I've got my demand zone, but now my 200 EMA is just below the 4 hour zone. But you can see it's just been riding the top one, the 50, pretty well. It's been respecting the 50 quite well. So it really hasn't even had any opportunities to hit the 200 EMA. But that 200 also coincides with this trend line that I drew up way back when. It's basically hugging it. So that's really, that's why I have more interest in that 4 hour zone. but it just has not had any interest in visiting the 200, as you can tell, for months. But we are finally kind of getting a little bit of a breakdown. If we go back to the daily, okay, you can see it did kind of cut a little deeper. If we're looking at that wick right there, we did break and close it. So maybe that'll weaken it up enough to come down here. I don't know. But that's the only reason I was really looking at this 1 hour zone to begin with, was because on a 4 hour, it just hasn't even come close to the 200. It's been hugging the 100. And where's the 100? Or I'm sorry, the 50? It's right here. On the 4 hour chart, it's right here. It's up higher. And the rules, remember, are wait and buy the asset when it comes back to the moving averages. I'm just a little pickier because I want it to come back to 200. But when it's not visiting the 200 and it's only visiting the 50, okay, that's good enough for me. I'll just go down another time frame to see where the 200's at there and wait for it there. So that's why I've got my alert set here, because of a lot because of the moving averages. But I have to have a demand zone, and that's what I have, even though it's not the strongest, and even though it's not the most well positioned. So that's why I'm watching Aussie yen, and also the fact it's the Aussie yen, it's the strongest bullish asset. So I feel like I don't want to say break the rules, but amend the rules as far as the curve analysis on this one. I do that a lot. Okay? When it comes to the curve analysis, I don't always buy in the lower third. I don't always sell in the upper third. You know, I do diddle in the middle, but I do it because I've got a whole bunch of other reasons to. So it's kind of like, do as I say, not as I do type of thing. If you're a newer, it's just a good idea to wait and get the cheapest price possible to buy. It really is. If you don't, if you're not quite familiar with all the fundamentals, sentiment just yet. Because it's just like the way you buy or sell anything in life, right? Wait for a discount. If you see a new coat at the mall that you really like, maybe it's a $250 coat, I don't know, leather coat. You really like that leather coat. Do you have to have it right now? If so, you're going to pay retail price, full retail price. But if you have the patience to wait for a week, maybe it'll go down $200. Okay, it'll go down to $200. Maybe you wait a second week. Maybe it goes down a little more, $175. Maybe you wait a third week, it goes down to $150. Okay, if that's a fair value to you, then you'll buy the coat. Right? None of us want to pay full price for anything, do we? Remember, the way you trade should be the way you buy and sell anything in life. Okay, if you have a used car, you're selling it. Do you want to sell it? Do you want to sell it for $10,000, or do you want to wait for price to find a buyer that wants to buy it for $15,000? Okay, you tell them you got a couple people interested. First person offers you $10,000, then you take that to the second person, they offer you $15,000. Right? Perhaps the $10,000 offer might exceed to $16,000 or whatever the case is. But the point is, you sell. You as selling, you want to make as much money as possible. So you want to sell as high on the curve as possible. Right? Again, trading should be treated the same way you buy or sell anything in life. But far too often, that's exactly the opposite of what happens with retail traders. Okay? They're buying at all-time highs. Look at silver. Look at gold. As silver has made its ascent, there were pictures of lines out the windows at jewelry places, okay, metal dealers, gold and silver dealers, where people were buying silver left and right after it's at all-time highs, only to see price what? Crash. Okay. Up here, guys, into January, there's buyers out the door waiting on buying silver, only for the next day or two for it to crash. You think they're happy? No, but this is the reality of how most people trade. Oh, price is up. It's going up. It's going to the moon. It's going to the moon. I got to buy it, only for it to drop, right? It's just nothing more than a healthy correction. People taking profits, right? Somewhere in that area was where President Trump said that he was not going to attack Greenland. Okay. So a little bit of geopolitics kind of cooled things off there for a while. But now we're back to some tensions. Okay. Would not surprise me at all to see gold and silver go back to their all-time highs, right? Obviously, with Iran, the Iran thing going on. So anyway, just a little bit of side topic stuff. You guys know me; I kind of get off on side rants. As far as my favorite items on this bearish list, guys, really are not even the bottom three, because the euro is a strong currency, yet it's telling me to sell that strong currency. Remember, if I go back to my Eco Surprise Index, the euro is at a 60%. So it's a fairly decently strong currency. Yet, it's telling me on this list that I should be selling the euro. Well, I damn sure don't want to sell it and buy the Swiss franc, because the Swiss franc's only a 50%. Okay, 50% right there. The only thing I'd be interested in is selling maybe to the Aussie. But the point is, it's a strong currency. So I just don't like the idea of selling it, guys. So what is it asking me to sell that's actually weak? Well, I don't know. Let's look at the pound. Let's look at the British pound, because we got pound dollar, we got pound Aussie. What's the pound doing? Look at that. Pound is only 33%. That makes a lot more sense to me. Sell the pound, buy the US dollar, because that's on the list. Pound dollar shorts. Yeah, makes sense. Euro dollar strong. What was that other one? Pound Aussie. Pound Aussie makes sense too. Sell pound Aussie. So that means sell the pound, which is weak because it's only at 33%, and buy the Australia dollar, which is strong. Okay. The quote currency. Base currency is weak. It's telling me to sell the base currency. The quote currency is strong. It's telling me to buy the quote currency. So that makes a hell of a lot more sense to be more interested in pound Aussie and pound dollar. They're not as weak. They're not as bearish of a signal as these euro pairs, but I just personally, as much as I can avoid it, if I got this on my list, this will be the exception to the rule of going for the weakest asset, where I could go for something that's, that makes a little more sense to me. Pound dollar, pound Aussie. So that's going to be my favorite sells today. Let's go look at them. Way up. Pound dollar. Okay, daily chart. I've got the 8 EMA below the 21 EMA. So the dark red lower than the light red. So that's confirmation that we're in a downtrend, along with the lower lows and lower highs. But look where we're at. What are we in right now? We're in a daily demand. We bounced. So do I want to sell an asset that has dropped into a daily demand? No, you can't make me do it. I'm going to avoid that signal, guys. And I've already drawn this up, I think, yesterday, saying what I want to see. It is a bearish signal, yes, but I need to see it either, prove this demand zone wrong, which is this red line, for a retracement back to a sell, or I need to see a healthy premium, meaning I need price to rise to a more expensive price for me to then sell it. Well, you see I got a whole bunch of red rectangles in there, so let's see what supply zones I drew up. Okay, so no 4 hours. God, why is my mouse so slow? I don't know why it's so slow, guys. I swear it moves like molasses. All right, so nothing on a 2 hour, so it's definitely 1 hour supply zone. So look at this. got a supply zone here, which coincides with a former support resistance line. That's the blue dash line. That's actually where I have my alert set. So that's going to be my first interest point to short. Okay. But I need price to increase to go to my go to that premium spot. But if that one doesn't work, well, I've got some more zones ahead of it. Okay. I've got a few. I mean, there's quite a few zones on here. 1, 2, 3 supply zones right there, guys. All right, what about volume? Volume spread analysis. Which one looks the best? Probably that one up here. Small, narrow zone, but look at the VSA candle on the leg out candle. It is red. What about this one over here? It's going to be this yellow candle. So that's not as strong. So that one looks like the strongest. And then this one here that I've got my alert set on. Yeah, not very strong. Not strong until we get to the candle after the leg out. That red candle right there is where the most volume is. So the verdict is possible sell. And by that point, obviously, it'll be spiking through the 200, which is good. So a possible sell, but a small risk. So there's no full risk going into this trade. It's just going to be like a partial risk. Okay. Very small leverage. Dip my toes in. Okay. You can't win if you don't get in. So I'm going to get in with a small position because I don't like the volume. And I think that the confluence is probably going to potentially has the strength to push price higher through all these zones to more up here. So we'll see. That's pound dollar. That's selling the pound and buying the US dollar, right? Selling weakness, buying strength. What about the pound Aussie? Because that's on the list as well. Again, selling the weak pound, buying the strong Aussie. Yeah, it's going to be similar, guys. We got so on both of these, basically both of these, we've bounced into some higher time frame demand zones. So it's really kind of a shame because I would really like to get into either one of those trades, pound dollar or pound Aussie. But down here, you see we've bounced into a weekly. Now, I focus more on the daily zones, and I don't think we actually hit a daily demand. See, I don't know why my mouse just takes forever to scroll my price out. I don't know what's going on with this damn thing. I don't know if it's coming loose. Perhaps I need to, you know what? Maybe I need to. Maybe I need to go to my mouse, devices, mouse. I need a scroll speed. Is there a scroll speed I can change? Lines to scroll at a time. Is that it? Oh, that's it. Let's see if that changed. I don't know. Let's try more. See, it's still like hanging up or something. I don't know why it's doing that. Lines to scroll at a time. Mouse pointer speed. I want that staying up. Primary mouse button. Yeah, okay. Scrolling. Lines to scroll at a time. Okay, well, I think that's, yeah, it's like every other scroll of my finger, it doesn't do anything. And I don't know why it's doing that. Down motion scroll. Yeah, I don't know what the hell's going on with it. Hopefully that fixes it. So anyway, sorry about that. I was just trying to fix my mouse scroller, but yeah, I don't know. It just like literally every other time I use the scroll button with my index finger, it doesn't do anything. So it's like I'm having to double the work just to get it to do what I want, and it's still going slow. Ugh! I hate it when it does that. All right, guys. By the way, the Dow and the S&P are on the bearish list for the first time in a while, guys, both of them. So let's go look at these. Let's go look at the U.S. indices real quick. Dow, S&P, -6. It's not something that you see too often. If anything, those are always on the buy list. But of late, we have had the opposite. So let's go. Whoa, now it's like going fast. Okay, so it's going way too fast now. Wow. Holy cow. Whatever I did made it go way too fast. All right, mouse. Let's do mouse again. Gosh dang it. Let's go like about the middle there. Let's see what that does. Oh, that's doing it way too much now. Good God, Tahir. Come on. Can you just do what I want you to do? Oh, my goodness. All right, guys. Dow, S&P -6. Let's go look at these. S&P. Okay, I got a daily supply. Now, I'm not – so I drew this daily supply up a little bit on the premature side because it has yet to break a structure to the downside. Okay, we're talking about this wick here. So, yeah, I'm not really sure. I'm just going to get that out of the way for now. But yeah, nevertheless, though, we do have a really nice 4-hour supply. A pretty nice candle up here. Pretty nice big candle coming out. Volume spread analysis picks up. Now, unfortunately, we didn't break the structure to the downside, but we did kind of break these more minuscule structures, if you will, up in this area here. So I still got to keep an eye on it. I mean, if we get a retracement up, obviously might be interested in a short position on this, but not too excited about it. The daily, the EMAs are working out in the bearishness on the daily, so I like that. 4-hour, obviously that's the time frame where my supply zone's at. My 50 EMA is below my 200, so I do like that. Let's go, but the RSI is nowhere close to the 80 level. What about 1 hour? So 1 hour would have the possibility for the RSI to get to 80. The problem is by the time it does, the 50 is now going to be on top of the 200, and I don't want that. I don't want that. But reasons to, there's reasons not to get into this trade, but there's also some pretty decent ones, like the very strong fair value gap coming out of it. That in itself is a pretty dang good signal, pretty good reason to take at least a small position, a little feeler position. So this would be another feeler position. This would be another position where I would probably be interested in taking just a percentage. Take a fraction of the leverage that I normally would. Because this is, if we're looking at sideways trends, this is the top end of the curve. And then the bottom down here would be the bottom of the sideways trend. Okay. Pretty, and so it's not really giving us a strong downtrend by any means. It's more of we've come up forever and now we've been going sideways forever, okay, type of thing. But just to take advantage of the bearish score that we're getting, the -6, yeah, I could see that as a spot to get into just a small sell with the anticipation of buying to cover, obviously, closer down here. So something like that. Yeah. Something like that. So that's why I've got my alert set just ahead of that 4-hour supply there. Take advantage of some rare U.S. index weakness, right? So anyway, guys, I'm going to wrap this thing up. Did want to let you know that I've got I think a 9:30 stream today on Trader Nick. So A1 Trading. You just go on here. You'll see I've got it says 10:30. So this is Eastern Standard Time, guys. This is New York City time, 10:30 a.m. So 9:30 here in Kansas City, where I'm at. But I will be on. So be sure to go to a1trading.com, or you can type in Trader Nick in the search engine for Trader Nick's spot where he'll have his live stream, or it'll actually have it right here. You can just click right straight to it. Okay. But I'll be on at 9. I'll be on in an hour and a half. So would love to have you come say hello. Otherwise, I'll be back on 6:30 tomorrow morning, and we'll see what we got. So, guys, I'm going to go ahead and head on out. Have a wonderful day. We'll talk to you next time.